Hey there guys, welcome back to another video. If you're new here, I'm Jake and I make these simple investing videos. So in this one, I'm going to show off what I did today in the market. So you can see, scroll down a bit, you can see market sell at 11:55. I sold 7.3 shares of Google. So it was $2,638 and my gain was like 11%. And then I'll show you that I sold that and then I bought Microsoft. So you can see that I bought 6.4 shares for $412. And then I sold off some other shares as well, because I was just cleaning up my portfolio a bit. And then I'm going to show you that another stock that I'm going to sell off right now is Bank of Nova Scotia. So I'm going to sell Bank of Nova Scotia for actually, I should check out when their ex-dividend date is, so I'm just going to ask Gemini quickly. What's Bank of Nova Scotia ex-dividend date? And then I'm thinking about selling Bank of Nova Scotia so that I can buy more TD stock. And then I'll just ask when's TD's ex-dividend date. So if Bank of Nova Scotia is on July 7th, we're going to see TD is on July 10th. So I'm just going to go ahead and sell my stock. So market sell maximum. I'm going to sell Bank of Nova Scotia, and then I'm going to use that to buy more Toronto Dominion Bank, because in my opinion they're a safer stock to buy. Their dividend growth rate is higher. So if you go into the Blossom app and up here, then you go to the Beevis AI that they have, and it tells you a bunch about different stocks. So I'm going to ask it about compare Bank of Nova Scotia to TD capital gain and dividend growth over the last 10 years and future 10 years. I like using this AI for investing because it's set up for basically just about investing. So you'll see the difference between this AI compared to other AIs. This one's way better. And you'll see it doesn't respond right away. It actually thinks about it. So it says great data. Here's the full breakdown. Both the last 10 years and what the next 10 years could look like. Capital appreciation, TD wins by a wide margin on paper. Total return plus dividends reinvested over 10 years came in roughly at 291%, 14.6% annual. Impressive for a bank. BNS, by contrast, was a decade of frustration. The stock largely went nowhere for years before its recent recovery to 113. So Bank of Nova Scotia's 10-year dividend growth rate was 6.3%, which sounds decent, but the 3-year dividend growth rate collapsed to minus 5%. They actually cut dividend growth during the LATAM headwinds. TD dividend payout ratio sits at a very healthy 45% with consistent raises. TD is the clear winner. Cleaner dividend growth here. So the TD total return figure includes a monster 2025 plus 85% and strong 2026 year to date. A big chunk of 2025's gain was a one-time event. TD sold 10% of its stake in Charles Schwab for 8.6 billion gain. Underlining earnings growth was more modest. Don't mistake a Schwab fueled year as repeatable. So next 10 years, the bull case is real. Once the US asset cap is removed, TD has, so I'm just going to scroll down to the verdict here. So the verdict for dividend growth rate plus capital appreciation strategy for the next 10 years, TD is the stronger pick on both dimensions, but it comes with a caveat. You're buying a recovery story. If AML remediation wraps up cleanly and the US asset cap lifts, TD has the platform to re-rate meaningfully. The dividend growth runway, 45% payout ratio, plus growing earnings is better than BNS. BNS offers a more yield today, which is 3.9% forward yield, and the potential for a mean reversion trade if the North American pivot delivers. It's higher risk, higher reward between the two. For a dividend growth strategy specifically, TD's track record and balance sheet quality make it the more reliable compounder. The honest take for your 1% TD position, there's a case to size it up to 3 to 5% over time. But as we discussed, Royal Bank remains the gold standard Canadian bank for total return. It would be worth comparing Royal Bank versus TD head to head for your core bank allocation. So I'm just going to ask it, how does Royal Bank compare to TD for my bank allocation? So I'm just going to wait for the verdict and then see what it says. So Royal Bank wins, clean, consistent, accelerating growth, 7% raise just announced. TD has been in semi-annual growth mode for the regulatory cloud, creates real uncertainty around how aggressively they can raise going forward. Capital appreciation. Royal Bank wins on track record and current earnings momentum. TD arguably has more upside optionality if the asset cap gets lifted. Valuation, TD wins. Its cheaper valuation is real, but it's cheap for a reason, and you're not being compensated much on the dividend yield side either. Risk, Royal Bank is cleaner. TD has a genuine tail risk. So the bottom line for a dividend growth plus capital appreciation strategy with a 10-year plus horizon, Royal Bank is the core bank holding. It's the one Canadian bank that fits the thesis cleanly without caveats. TD can be a smaller secondary position if you want value exposure and believe the recovery story, but I wouldn't anchor your bank allocation to it while the AML overhang persists. Blossom members clearly agree with the long-term thesis on both. TD is the sixth most held on Blossom with 15.5 thousand holders. Royal Bank close behind with 7.3 thousand holders. So if you like the video, comment down below, smash the subscribe button, smash the like button, and I'll be back for more investing videos like this one.